Let's go to Mizuho analyst and executive director Brett Lindsay for more on the space. Brett, thanks so much for joining us. I mean, clearly overall it's been a decent year of returns for the sector. Do you expect that to be repeated?
Yeah, hi, Wilf. Thanks for having me on. I mean, certainly a busy year for the industrial group. Everyone faced, confluence of headwinds around supply chain bottlenecks, labor availability, inflation across the board. But I do think even more importantly, the companies are advancing priorities around sustainability within the portfolio, whether it's simplification, digital initiatives, ESG awareness, and really taking that to another level post-COVID. So I think that's certainly positive. In terms of the performance for the group, as you mentioned, there was some relative outperformance, but actually on average the industrial coverage did modestly underperform, but the dispersion was quite wide. Sustainably leveraged stocks around electrification, grid, smart buildings, factory automation, those stocks did very well. Looking at the aerospace and energy stocks, I mean, those ones certainly lagged and faced a much greater headwinds in 2021.
And so what's the challenge for next year? Is it whether or not the economy will outperform or whether or not their multiples can expand any further than they have already?
Well, our base case scenario for next year and really into 2023 is for modest economic growth. And I think in that environment, the industrial group can continue to outperform, historically speaking. So we're still constructive. We do think we are approaching mid-cycle within the industrial recovery. And, so if you look right now, we're going to be facing in Q4 the fourth quarter of consecutive positive organic growth for the group. Historically speaking, industrial cycles last about 10 quarters on average. So we think we're young in the sense of duration, but certainly advanced in the sense of, we have seen a sharp bounce off the bottom. So we are, cognizant of that. The good news, Wilf, is that inventories are very lean in the channel. Backlogs are up very sharply. Orders are resoundingly positive in the last quarter. So we do think that does help revenue visibility as we look into next year.
Let's get some of your stock picks, and I've tried to go through your coverage at some that are perhaps less well known. Firstly, let's go for Eaton Corp.
Yeah, so Eaton Corp is one of our top picks. We think it's a clear, big cap quality play in electrification. Our price target is 200, but they've been really able to, step up the operational rigor across the portfolio, but also made some very significant portfolio changes in really just the last 12 to 24 months. They've gotten out of some of the more cyclical businesses within the portfolio, like hydraulics, like their auto conveyance business, lighting, and really remix the portfolio to much more sustainable businesses. Roughly 90% today is electrical and aerospace. We really like the electrical theme around grid modernization, grid hardening. It's also a data center play in a sense. They have about 15% exposure to data centers, which is an area we like as well. So like Eaton Corp quite a bit, we do think that there's some sustainable growth here as we look into 22 and even 23.
Let's squeeze one more in. What about Zurn?
Well, Zurn is so they're newly public. So they actually were a spinoff from Rexnord, which was last year, and really the theme there is going to be around late cycle markets. They are a leader in water and some various ESG kickers as well. So like Zurn here, it had a nice run prior to the separation from the Rexnord parent, but I think Zurn has a lot of sustainability within their markets. They're a leader within the water products and building systems and so on. So we think there's a lot of legs with Zurn and one of our favorite idea here.
Brett, thanks so much for joining us. Much appreciated.
Thank you.